Hi guys, welcome back to my YouTube channel, and today we're going to speak about what is the Fibonacci retracement and how to actually plot one on your charts for Forex, NAS, indices, anything that you trade, boom and crash, synthetics, crypto or anything. So the Fibonacci retracement is a mathematical model, and I'm going to put it in normal terms. It's basically the place with the highest probability on your charts for a chart to go and hit a possible support or resistance zone and then turn around and continue with the trend that it wanted to. So for example, if you see Nasdaq over here going up to this area and coming down, the 61, the 71, the 78, the 50, those are possible and places with a higher probability for a support to form and for NAS to hit that area and then go on to further bullish movements to the top. Okay, so this is all math worked out by Fibonacci. So we are going to just take that knowledge that we know, okay, this is where there's a bigger possibility for Nasdaq or any chart to go to and then turn around and continue with the trend. So we're going to use that mathematical idea and model to find possible entries on our trading. Okay, so I like to combine the Fibonacci with order blocks, fair value gaps, and all those things. But let's quickly just look at this example over here, okay? How to spot the Fibonacci retracement and how to draw it on your chart. Let's quickly go into it. So when Nasdaq moves in an upward direction like this, and we obviously know when it moves up, it's bullish. But how do we know it's going to continue bullish? Well, in this case, when it breaks a bunch of highs like this, we know that we are going to most probably go into a bullish move further because it's breaking previous highs and moving to the upwards direction. So when it does that, we then have another possible probability case that Nasdaq wants to go up. So now we know highs are broken, and now we're going to draw our Fibonacci from the lowest point of that bullish move, which is over here, to the highest point of that bullish move before it started retracing back down. So it broke these highs and now it's coming back down. So we draw the fib from the low until the high and we leave it there. Now we know that the 50, the 60, the 71, and the 78, these are the most biggest probability areas for this thing to go back into a bullish move. But then I like to combine it as well with order blocks and fair value gaps. But on Nasdaq and my boom and crash trading, the 61 until the 78 is my favorite areas for Nasdaq to actually make that turn around into a bullish move in this instance, or a bearish move if you're looking at a bearish case. Okay, so as you guys can see here, I have spotted the order block there, which is the most recent opposite candle. So I would definitely be placing my trades in that 61 to 71 zone with a stop loss probably below the 78 or just below the 71. So that's how you would draw and find the Fibonacci area for you on the chart. Okay, let's quickly look at a sell example on Crash 300 over here. Let me quickly just show you guys my settings on my fib if you want to pause the video here and just copy my Fibonacci settings. So if you guys want to do it there, coordinates isn't really important. It's mostly just the style and all these things around here. Okay, so let's quickly go to Crash 300. This is now a bearish example. I'm just going to delete this. So we have Crash going down into a bearish move over here, breaking these lows. When it breaks a bunch of lows like this, or a solid support was broken and turned into a resistance like this, if you want to speak about it like that, we're going to take the top part and draw it until the bottom, where it turned around and started retracing back into this area over here. Once again, on Crash, my favorite areas would be around the 61, like I said with NAS, And I would then look for an order block in this area over here for that extra sell confirmation for my trades. But just if you're looking at fibs, the 61 and the 50% and the 71 and things, but on crash my favorite is the 61. That's why I don't have the 71 and the 78 on here, but that will be my area then to find order blocks. It's going to be from the 50 and up. That will be my area to find those order blocks on the lower time frames for that sell. And I'm probably certain there was an order block there where that wick is over there for that sell. So basically it's from the high to the low, and you leave your fib in there waiting for it to retrace back into that 61 area where you will find other reasons or more reasons to take the sell. So once again, this is my settings for my fib if you want to quickly pause the video and check it out. But that's basically how easy a fib is. It's basically just another tool to use to find the correct areas for your order blocks, for your entries, for your TPs even. For example, on NASDAQ, if you leave these two orange lines in or yellow lines in, that's also a very high possibility area for NASDAQ to go towards for making that next leg up on the trade to the upside according to the mathematics of the Fibonacci and the model that they provide. So yeah, this is how I use the fib to take my trades. If you guys want to, you can give me a nice like there and a comment and ask me any questions if you want, and I will see you guys in the next video. Let me know if there's anything else that I can explain to you guys. I'll check you guys in the next one.